Hello, Oracles. Well, Tesla fell 6% today after delivering record numbers that were technically a beat. But there was some question as to whether it was actually a beat or not, depending on what information you got for whatever consensus was out there. So we'll dive into some of that and some of the reasons why maybe we pulled back today. Again, not a concern whatsoever, in my opinion. Long term, none of this is going to matter. We are moving forward. We also saw that Tesla is now in Turkey, and we also got some information about the Cyber Vault, which is really just a box. I don't know, not too exciting there. Obviously, we were anticipating something maybe a little more exciting that was going to move the market forward, and it did not. So, we'll get into all of that, what we could anticipate with the numbers going forward in just a minute. And so, jumping right into the charts, we can see here closing down 6%, falling down under $200. So, my thought today was based upon how the market was going to react. We were going to be trading between 200 and 213. The $200 level was the level I was looking at to focus on to see if we were going to break below it. And that we did. We broke through it pretty early on in the day. So, we came down and then we bounced intraday right around this 192 level here, which is another level of support that we've got. So we bounced off of that and basically stuck between these two levels of support and resistance of 192 and 200. And with the open that we had this morning, there is a gap that is going to be above us now. So we'll have a gap between that 207 and 202 level. So again, we're still kind of in this consolidation phase. We really didn't break down to break below it. So one of the things I'm going to be paying attention to is, are we going to fill this gap above us and then come back down? Are we going to push up to this 213 level again and then come back down? This might be something we figure out in the next couple of weeks. Don't forget that the earnings are going to be on April 19th, so that is just over 2 weeks away. And now, one thing that we will get from macro information before we get to earnings are going to be CPI and PPI. We are going to be getting the CPI data on April 12th and then the PPI data on April 13th. So those two there again are going to give us this indication as to which way the Fed is going to be moving when we come to the next FOMC meeting in May. And so Open Skies tweeted out here that the market is pricing in May's FOMC decision versus the CME Group's Fed Watch. So the percentage that is getting priced in right now, there's a 0% chance that the Fed is going to be pivoting and cutting by 25 basis points. There's a 56.3% chance that the Fed is going to increase by 25 basis points. There's a 0% chance that the Fed is going to hike by 50 basis points. And there's a 43.7% chance that the Fed is going to pause. And again, as we've discussed before, when the Fed pauses, historically, we see a rally in the market. A lot of other factors go into this as well. So it's not saying that when the Fed pauses, we're going to rally. It's not guaranteed, but historically, that is the data that we have seen. So if this is what is going to play out, we may see a rally going off of this. Now, don't forget, everything is lagging, which is why when the Fed pivots, we typically see a sell off because the Fed is pivoting based upon lagging data, which historically means that there's a recession. There's a recession, the Fed pivots to try and re-stimulate the economy. But when the Fed pivots, it does take time for that to kick in. Just like we've seen with the rate hikes going forward over the last year, it takes 3 to 6 months for that to take effect in the economy. Same will take place when we get that pivot in the other direction. So, things to pay attention to as we move forward. But if we do end up getting indications from that CPI and PPI data that the Fed is going to pause, it could be a very bullish signal and we may see a rally pushing us up. And that might be what helps us break that 213 level. If we don't break it at that point, it may be earnings that push us past that if we come in with high enough margins. I think right now, the big question in the market is, what are the margins going to be for Tesla? They obviously took major price cuts in the first quarter here. So are they able to maintain above 20% margins for the first quarter? That we will have to wait and see on April 19th. And so one of the reasons that we saw a sell-off today based upon some confusion as to what the consensus estimate was, Gary Black tweets out an article from Barron's discussing how when you look at FactSet, they were anticipating 430,000 units being delivered. However, there were only 10 analysts that were actually taken into account when they came up with these numbers. So there's 47 analysts that FactSet covers. However, not all of them updated their numbers. So, based upon the 10 that they had, the 430,000 is what they came up with. However, when you're looking at Bloomberg or Tesla's numbers that had more analysts involved, there was 421,000 deliveries as the consensus estimate. So, this is where the confusion came in. And of course, there were some articles, depending on which way the manipulators wanted to move the stock, that discussed whether it was going to be a beat or a miss. And you can clearly see the ones who had articles out there as a miss were most likely the ones who were trying to short the stock. And now, of course, none of this is factual, none of this is proven, but kind of makes logical sense. And you guys can let me know your thoughts in the comments below if you think that was the same manipulation going on as well. And in some other great news that we got today, Sawyer Merritt tweeting out news: Giga Berlin will reportedly soon expand to a permanent fourth production line shift to increase production output. Quote, Tesla wants to let 500,000 cars roll off the production line per year, about 10,000 per week. And as we know, Berlin just announced that they were at 5,000 per week. So this means that they are looking to double where they are at right now by adding this fourth line in. So this is showing that their speed of ramping is insane. They're going up significantly. Austin just hit 4,000 vehicles per week. They are also focusing on the Cybertruck as well, but they are ramping up nicely also. Again, both of these factories still have a lot of ramping left to go. Shanghai is going to continue to push out more, but they are more near the top of their growth when they're expanding over there with their production. Fremont is also just trying to squeeze out a little bit more here and there, but Berlin and Austin have a lot of room to grow. And then don't forget, we've got Mexico coming online next year. So by the time Mexico comes online, I have no doubt we are going to be seeing Berlin and Austin pushing close to that 10,000 vehicle per week mark. And then we have Mexico then starting to come online. And we also had Tom Ju coming out saying that we are most likely going to be hearing about another factory this year as well. So we may even have two factories ramping up, very similar to how we have Berlin and Austin ramping right now. And even more great information, we've got Blue Collar Disruptor retweeting out from Dimazeniuk. Well, there's another 85 million potential customers. This is amazing. Congratulations, Tesla Turkey. So we now have Tesla officially in Turkey with a whole new customer base. And congrats to the team over there. And now again, when we're talking about Tesla and growth, we're talking about total addressable market. There are a lot of countries that Tesla still is not in. There's a lot of market left out there for them to grow into. Meanwhile, if you look at GM and Ford, they are actually shrinking and pulling out of some countries because the sales there do not justify them being there. Two completely different animals moving in two different directions. Tesla is growing, legacy auto is shrinking. So this is something to pay attention to as we go forward. And speaking of legacy auto, we've got GM coming out saying that they've revealed that they sold 20,000 electric vehicles in Q1. The total was 20,670. They sold 19,700 Bolts, 968 Lyrics, and a whopping 2 Hummer EVs. The company said it is on track to build 50,000 EVs in North America through June and double that in the second half. And these are their first quarter results, and these again are for North America, so that's 603,208 vehicles sold in the first quarter. So now again, this is the number I actually look at when it comes to where the competition is. It is not EVs versus EVs. So Tesla is truly competing against ICE vehicles, but we have to remember that legacy ICE vehicles are shrinking and going away. So at some point in probably the next year or two, we will end up seeing Tesla overtake ICE vehicles as sales. I still think that this year we are going to see the Model Y becoming the best selling vehicle in the world. And so that is just the first signal that yes, Tesla and EVs are here. They are taking over ICE. And we are going to see this continue as the decade plays out. So again, overall, the stock coming down 6%. I can't remember which one of you it was in the comments who had said that they were most likely going to come down 7%. You were pretty spot on. We came down about 7%, and then we bumped back up a little bit at the end of the day, closing just over 6% down. So great call on that one there. And again, for the way I look at it long term, none of this is going to matter. I still buy every single day, and I'm still holding on to more cash because I do think that we are going to get those gaps filled sometime when we hit that pivot point. So it may not happen before the pivot. This might be something very similar to all the gaps that we had filled last year that were somewhere 1, even almost 2 years old, that the gaps ended up getting filled. It may end up being the same situation. But in the meantime, we may get a nice run. So maybe now is a time to buy. You guys need to do your own due diligence and research, do what's right for you and your portfolio. None of this is financial advice, but we have some good opportunities that you could buy. And especially if you're going to be long term on the stock, if you're holding it for 5 or 10 years, whether we're at 200 or 100, truly doesn't matter. I just want to buy more for less because I can get more shares. And as a little guy, I just want to be able to add as much as possible for as little as possible. So that's all I've got for you guys today. Thank you so much for watching. I appreciate all of your support and feedback. We'll see you in the next one. Have a great one.